Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we begin the week this Monday morning, we've seen one more day of correction, though from the lows of the morning we have recovered a little bit, and as I speak to you, the Sensex is down about 550 odd points at 54,200. Nifty is down about 175 odd points, currently trading at about 16,250. Nifty Bank down about 480 odd points at 34,100 approximately. And to add to the problems, rupee is at its lowest level over the recent times against the dollar, trading at about 77.40, and the energy basket has seen an uptick, $112 a barrel on the Brent and $109 a barrel on the NYMEX. Last week we did see the governor move the interest rates after the recommendations coming in from the Monetary Policy Committee, and the revision was to the tune of 0.40%, out of turn. But if not now, it would have definitely happened in the month of June. And looking at the levels of inflation, it was prudent to move before rather than wait for any particular date. And even in the past history, there have been times when the interest rates have been changed, not waiting for the platform of credit policy, and out of turn there were announcements, and that's what exactly happened last week. And we did see choppiness and volatility coming into the market after that. And the current levels where the markets are trading as far as the index is concerned, Sensex, Nifty, from the highs of 62,200 on the Sensex and 18,600 on the Nifty to the current level, in terms of percentage, if you go to see, it is approximately 13% from the highs to the lows this morning. And whenever markets have seen corrections of about 10 to 15%, historically speaking, friends, there is a base building exercise, and there is sideways movement, and then after stabilizing and making a base, we will see some kind of an up move, and that's what exactly has happened in the past history as well. Not ruling out small corrections going forward, but I don't expect it to be anything deep given the backdrop of events which have happened locally and globally. And our markets are more sensitive to the global news flows rather than local news unfolding. On the earnings front, well, there has been no great disappointment. We did see large companies come out with numbers last week. Reliance Industries was one of them. And of course, across verticals, in-line expectation, barring one or two one-offs that we saw. So on the fallback of earnings, I don't think there is any kind of negativity. And whenever markets correct 10 to 15 odd percent, like it has corrected 13 odd percent, my sense is that, and wisdom tells me that possibly we are near the bottom, and then possibly a range bound move. Of course, news flows is something that one cannot predict, but hoping that there is no aggressive news flow on the negative side, and that we could see stability coming in. Having said that, I think it's great time. I always mentioned that corrections are a great time to look at long-term investing and buying quality stocks where earnings have been delivered, corporate management is above excellence and par, and the long-term growth story is intact. So I will again reiterate the sectors that I have mentioned earlier: IT, banking, NBFCs, service, telecom service provider, life insurance companies, specialty chemicals, real estate companies, and a contrarian buy call given the price correction on autos, metal, cement, FMCG sector, just to name a few of them. I am not saying that we will see a magical rebound, And I think it is always prudent to see some kind of sanity coming into the market after corrections of close to about 13% and more so the sell side figure from the FIs post the interest rate hike by the Fed by about 50 basis point, which was I think highest in 2 decades if I'm not mistaken. And going forward, well, the Fed chief has also mentioned that there are not going to be any more aggressive revisions going forward. And now that our own central bank, Reserve Bank of India, and the Honorable RBI Governor has moved the rates by about 0.40%, hoping that inflation stabilizes, I think in the next credit policy, you could see a status quo with, of course, the stance that was mentioned by the Honorable Governor that whenever there is excess liquidity in the market, it would be sucked out, and whatever is necessary to be done for the growth to move forward and inflation to come down. The stance was accommodative, as he mentioned, depending upon what the situation is and more importantly what the inflation does. So hoping that we could see some amount of sanity coming into the market, and of course given this 13% correction, I'm assuming that a lot of weak hands and leverage positions would have been out of the system, thereby again bringing in some kind of stability and sanity into the market. So get into the sectors and stocks that we have discussed, frontline stocks, certain select mid caps, and of course in the IT sector we've seen one more merger coming through. L&T, Infotech and Mindtree. Possibly in the next 9 to 12 months, you will see a very strong merged entity. As a disclosure, we have positive coverage on Mindtree, and I think the swap ratio is also very, very comfortable in terms of valuation. So try to get into strong companies with this kind of corrections and look at long-term investments. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.